Is the AI investment boom creating the next stock market bubble? Artificial intelligence has become one of the biggest investment stories of the decade. Nearly every week, investors hear about another billion-dollar AI investment. New data centers, new semiconductor factories, new software breakthroughs, and new companies promising to transform entire industries. For many investors, the future has never looked brighter. But history teaches us something important. Whenever an industry attracts enormous amounts of money, one question always follows. Are investors witnessing the beginning of a new economic revolution? Or the early stages of another market bubble? To answer that question, we first need to understand why AI has captured Wall Street's attention. Unlike many previous technology trends, artificial intelligence has the potential to improve productivity across almost every industry. Banks are using AI to detect fraud. Hospitals are using it to assist doctors. Manufacturers are optimizing production. Retailers are improving customer service. Even small businesses now have access to tools that were unimaginable just a few years ago. This broad adoption has convinced many investors that AI could become one of the most important technologies since the internet. As a result, technology companies are investing hundreds of billions of dollars in infrastructure. Massive data centers are being built. Demand for advanced computer chips continues to grow. Electricity consumption is increasing as AI systems require more computing power. Investors believe these investments could generate enormous profits in the future. But optimism alone does not guarantee success. Financial markets have experienced similar moments before. The railroad boom, the dot-com era, the smartphone revolution. Each created incredible wealth. But each also produced companies that failed despite operating in promising industries. Today's AI race may follow a similar pattern. Not every company investing in AI will become a long-term winner. Competition is increasing rapidly. New startups continue entering the market. Large corporations are racing to release better products. Meanwhile, governments are introducing new regulations to address privacy, security, and responsible AI development. These factors create uncertainty. And uncertainty often leads to market volatility. Another challenge is valuation. When investors expect years of rapid growth, stock prices can rise much faster than company earnings. If those expectations are not met, even strong businesses can experience significant declines in market value. That is why analysts are paying close attention not only to AI innovation but also to corporate profits, consumer demand, and interest rates. Higher interest rates can make future earnings less valuable in today's dollars. Lower rates may encourage more investment. This relationship makes Federal Reserve policy especially important for technology stocks. At the same time, companies face another major question. How quickly can AI generate meaningful revenue? Building advanced systems is expensive. Training large models requires enormous computing resources. Operating AI services also consumes significant energy. Eventually, these investments must produce sustainable profits. Otherwise, investors may begin questioning whether current valuations are justified. Despite these risks, many economists remain optimistic about AI's long-term potential. Productivity gains could support economic growth for years to come. Businesses may become more efficient. Consumers may benefit from better products and services. Entire industries could be transformed. The biggest uncertainty is not whether AI will change the economy. Most experts believe it will. The real question is who will benefit the most. Will today's technology giants remain the dominant players? Will new startups become tomorrow's leaders? Or will entirely different business models emerge? History suggests that predicting the winners of technological revolutions is never easy. Some companies disappear. Others become household names. But one thing remains consistent. Innovation rewards businesses that continue adapting. For investors, this means looking beyond headlines and short-term excitement. Successful investing often requires patience, research, and realistic expectations. The AI revolution is real. But so are the risks. Understanding both sides of the story may be far more valuable than simply following the latest market trend. Because in the world of investing, excitement can create opportunities. But discipline is what builds lasting wealth.